Picture this. It's 2 a.m, you're lying in bed, phone 2 inches from your face, scrolling past someone your age posting their Bali trip, their new Tesla, their just moved into my dream apartment photo. And then you look at your own bank app and you're debating whether you can afford the name brand cereal this week. Sound familiar? Here's the uncomfortable truth. Most of those lifestyles you see online are financed with debt, credit and pressure. But there is a real gap between people who are financially calm and people who are constantly stressed. And that gap usually comes down to one skill. Not crypto, not side hustles, not lottery luck, investing. Properly, consistently, boringly. The biggest lie about the stock market. Most people treat the stock market like a casino. They think it's risky, complicated, only for rich people or reserved for finance graduates in expensive suits. In reality, the stock market is just owning small pieces of big businesses. When you invest, you're not gambling. You're buying a slice of companies that already dominate the world. Technology, healthcare, consumer goods, energy, banking, infrastructure. You're not betting on numbers. You're owning engines of profit. The real wealth gap isn't income. Here's something most people never hear. The difference between financially secure people and financially stressed people is rarely salary. You can earn 30k and build wealth. You can earn 120k and still be broke. The separator is this. Do your pounds work for you? Or just sit still? Because sitting still is expensive. Inflation quietly eats your money every year. A standard savings account paying tiny interest is basically a slow leak. Meanwhile, the stock market, over long periods, has historically grown far faster than cash. Not every year, not smoothly, but over decades, yes. What compound growth actually looks like. Let's make this simple. Imagine investing £300 a month. Not a huge amount, not impossible. Over 30-40 years with steady market growth, that can turn into hundreds of thousands. Not because you're clever, not because you timed anything, but because time did the heavy lifting. Compound growth is just money earning money. And then that money earning more money. It's slow at first, then suddenly it isn't. Speculation versus investing. Most beginners make one huge mistake. They speculate instead of invest. Speculation equal sign. Everyone online says this stock is going up. Investing equal sign. This business makes profits, grows steadily, and I'm happy to own it for years. Speculation is chasing hype. Investing is buying productivity. One is emotional, the other is mathematical. Market crashes, the fear everyone has. Yes, markets fall. They always have. They always will. But here's what history shows. Every major crash has eventually been followed by recovery and new highs. Crashes are terrifying in the moment, but for long-term investors, they often become discount periods. If you're investing for 15-30 years, next month's price is almost irrelevant. Time horizon changes everything. Why index funds? Change the game. You don't need to pick winning stocks. You don't need to analyze balance sheets. You don't need a finance degree. You can buy index funds. An index fund is simply a basket of hundreds of companies at once. Instead of trying to pick one fruit, you buy the entire fruit bowl. Historically, broad market index investing has beaten most professional fund managers over long periods. And it's cheap. Low fees matter more than most people realize. The psychology nobody talks about. Here's the strange part. When stocks go up, people get excited. When stocks go down, people panic. But if you're a long-term buyer, lower prices actually mean better deals. Think of it like this. You don't get upset when your favorite shop has a sale, you buy more. Investing works the same way. Emotionally, it just feels backwards. The 3 habits that matter most. You don't need genius, you need habits. Start early, even small amounts count. Invest consistently, monthly beats occasionally. Stay invested. Timing the market beats timing the market. Automation helps. Remove emotion. Let the system run. The practical starting point. This doesn't begin with strategy, it begins with a simple action. Open an investment account. You don't need thousands. You don't need perfect timing. You don't need to know everything. You just need to begin. Fractional investing means you can start with small amounts. Consistency beats perfection every time. The real skill? The stock market isn't about quick wins. It's about ownership, patience, and discipline. The people who quietly build wealth aren't louder. They're just consistent. They invest while others hesitate. They hold while others panic. They let time work while others scroll, and 20 years later, their future looks very different. Not because they were lucky, but because they started.